Good afternoon. Thank you for joining us for our Navigating the Home Buying Process webinar with an emphasis on how to obtain a home loan. I'm Corby Gage, Executive Director of Coastal Housing Partnership. And with us today is also Kim Hasgage, who is the Program Manager for Coastal Housing Partnership. Today's webinar features three local loan officers. We have Veronica De La Cruz from Union Bank in Ventura, Sandra Farias from PB and Associates in Santa Maria, and Mark Johnson with Cornerstone Home Lending in Santa Barbara. So Veronica, Sandra, and Mark are all part of Coastal Housing Partnership's network. And as part of this network, these lenders reduce their closing costs for their clients who are employees of our member companies. So they are wonderful ones to work with and have savings on your closing costs if you decide to go forward with your home purchase. The format for today's webinar, I'm going to be asking Sandra and Veronica and Mark questions about the process of obtaining a home loan and making sure that you are in a good readiness position to go forward and purchase a home. The remainder of our time together will be for your questions. We want to make sure we gear this to your needs and make sure that you have the information you're looking for. We're recording today's webinar, so we'll send out that recording to you after the webinar today, and you'll be able to have that to access for a resource. The webinar format means that your camera is off, your mic is off, so we can't see you or hear you. And if you have technical questions, please put them in the chat. Kim will be monitoring that and will be able to support you if there's anything that you need there. And then if you have questions for our panelists, which we hope you do, because that's why we're here, is you would put them in the Q&A, and you can make those questions anonymous, and you can just check a box that says anonymous, or you can just ask them whatever you like. And you can put them in the Q&A at any time throughout the panel. We will be getting to those at the end of our time together, but you can put them in at any time during the panel's answers to the questions that I have for them. And since this is the first step in the home buying process, meeting with a lender is so essential. That's really where you want to start. And we want to make sure that you have the information that you need so that you can take that first important step. And the reason that you want to be meeting with the lender first is that you really need to know how much you can afford. And you don't want to be self-eliminating because you have some preconceived notion of what size loan or what home you could purchase. That's what the lender is going to tell you. And you really want to make sure you've taken that step. So we want to give you the information so you feel empowered to take that first step. So before we get started, we'd like to take an anonymous poll to determine where today's attendees are in the process of buying a home. And that way we can gear our information to you and best meet your needs. So take just a moment to respond to that. And then we'll share that anonymously with our panelists so they know who's with us today in terms of profile. Just another moment on the poll if anyone has any last responses. Okay, great, thank you. We'll end that poll now. And we'll get started. So Veronica, would you please share a little bit about yourself?
Good afternoon. My name is Veronica De La Cruz, and as Corby indicated, I work for Union Bank. I've been with them for a little over 3 years, and I've been in the mortgage industry almost as old as my daughter. So about 25 years old or 25 years. And I love doing these educational seminars. So thank you for having me. And I hope that people get some good information and good data out of this.
Great. Thanks, Veronica. Sandra, would you please share a little bit about yourself?
Hi, my name is Sandra Farias. I'm a loan officer here at PB and Associates. I've been here for about 10 years and I've been in the mortgage industry for about 20 years.
Great. Thank you. And Mark, would you share a little bit about yourself?
Sure. Yeah, my name is Mark Johnson. I work for Cornerstone Home Lending in Santa Barbara. Kind of like our other two panelists, I've also been in the lending industry for about 22 years now. And it primarily, for me, we spend a lot of time working with first-time home buyers, and I know taking that leap from renting to owning is a big step. And so it's a pleasure to be here to help answer some questions and get started. Thanks so much.
Well, we really appreciate the three of you being here. So Veronica, we're going to start with you. This question is really kind of a readiness question. And there's multiple parts to it. We're going to kind of break it down. For the first part is, what can a potential home buyer do to best prepare to obtain a home loan? And what's the right time for a potential home buyer to meet with a lender?
So Corby's first question is, what can a buyer such as you do to start the process of purchasing a home? And when is the best time to actually meet with your mortgage consultant or your loan officer? The fast and easy answer to that is yesterday. If you do not own a home right now, and that is something that you would like to do, my best advice, and I think that both Sandra and Mark would say that as well, is to meet with the loan officer or your mortgage consultant so that they can put you on the correct path. Sometimes we have buyers that are not always ready to buy today, but they may be ready to buy tomorrow. They may be ready to buy in 3 months. They may be ready to buy in 6 months. The best idea is to meet with that loan officer, discuss maybe what you want to pay per month, maybe how much money you have for a down payment, and what your goals are and what your dreams are and ideas. And again, the best advice that I think that we could give is to meet with someone and don't be scared, because we're here to help you.
Great. Now, Veronica, what if
Sure.
someone doesn't think, they're ready to buy for a couple of years? Maybe they're thinking that down the road, they're going to get a promotion or a raise, or they're getting married and maybe they're going to have 2 incomes and they're going to be in a better position. Is it still a good idea to meet with a loan officer now?
My answer again would be absolutely. If you're that far ahead of a planner, kudos to you that you're prepared and you know that you want to save X amount of money per month. You know that you're going to be married. You know that you're going to have another income and so on and so forth. Meeting with a consultant is exactly that. They are going to consult you and they are going to give you their vast knowledge and experience and professional opinion as to what they think you can afford now or what they think you can afford in the future, whether you're buying in California or some lenders lend in other states. They will actually just help you get more on that path if you are there already.
Great, thank you. Sandra, so when you're meeting with a lender, I guess you're asking for a pre-approval, right? So what is a pre-approval and why is it important, and what's involved in the process?
Well, the reason why pre-approval is very important is because we review, as loan officers, we review their income, their assets, their credit to determine the eligibility to how much they qualify for. The client also wants to know how much they can shop for. And if there was any credit issues to be dealt with, you can deal with those credit issues before they start submitting offers or start shopping. So loan officers can prepare you for the do's and the don'ts while shopping or in escrow.
Okay, so if you're meeting with a lender, they're going to run your credit, obviously, as part of the pre-approval. That's probably a really good thing to happen because a lot of times we don't know what's in our credit report. There might be something that needs to be fixed. Is that, do you see that frequently?
We do see that frequently when we run people's credit. Should be, sometimes there's derogatory credit, there's bankruptcies, there's multiple things that could come up in that process. And you want to be able to address those items before you give them a pre-approval to make sure they actually qualify.
Okay. I'm hearing a lot of real estate agents are requiring someone to have a pre-approval letter in their hand before they'll even start working with the client. Is that what you're seeing too?
We are. I'm actually seeing that a lot lately. And sometimes they do ask for like proof of funds, things like that. So they're taking that extra step to make sure they actually qualify before they actually let them into the home.
Okay, great. So it is an important tool to have.
Yes.
Is
very.
there a charge for a pre-approval?
No, there's usually no charge. It's just the income documentation, asset review, and credit. So sometimes there is a charge for credit report, sometimes there isn't, but usually we can wrap that all into the closing cost once they open escrow and get the loan started.
So this is an important tool to have, doesn't cost anything. Seems to make sense to go to a lender to get that pre-approval. Okay, great. Thank you, Sandra. Mark, Sandra was mentioning about credit scores. This is a big issue. Talk to us a little bit about credit scores, why they're important. How can you improve your score? How does the score affect your home purchase?
Sure. Okay. So credit and your credit score is one of the almost one of the biggest components of getting pre-approved. And the reason why is your credit score is going to affect not only your interest rate, but it's going to also affect what kind of a loan you're going to be able to qualify for. And so that credit score is really, really important. Having said that, what I'd like to do is just talk briefly about what affects your score. So one of the first things is, sorry about that. One of the first things is your credit history and your paying on time. That's super important. So make sure that you're always paying all your credit cards, auto loans, things like that on time. Another thing that impacts your credit score is your balance on your credit cards. If you're kind of overextended and you're using a lot of credit, say 75, 80% or 100% or a little more even, that's going to bring your credit score down. But one thing you can do to bump your score up, however, is always try to maintain a balance of 30% or less. What you have available to you. That's going to help generate a positive score. And of course, always paying on time. Some things that we see that, I would say, again, trying to kind of figure out how to, get the perfect credit score and whatnot is hard to do. If you've got some issues with your credit, don't be afraid to meet with a lender because we can kind of talk you through some ways to help boost up your credit score. One of the things I would say is be sure, like if you think, oh, I've got to pay everything off. Again, I would meet with a loan consultant first before you do that, because sometimes there's better ways to pay off credit card debt and credit cards than others. Sometimes you can get a better boost by doing one card over another. The other thing I wanted to just say about credit is the longevity, the length of credit that you've had. One of the worst things you could do is, chip away at paying off a credit card you've had for years and then close it out, because that's going to actually lower your score because you've just gotten rid of, a trade line that is, kind of giving you credit history.
So that credit score doesn't maintain that history. If you close it, it's gone. Yeah.
And that can negatively affect your score. I would just say, one of the things that we see often is people are kind of come to our office and they're like, I'm so proud of myself. I paid off all my credit card debt and closed out all my credit cards. And I'm like, well, you sure did, because you also don't have a credit score. You know, and this is like, that's like the, you know, that's really tough. But I'd say, you know, one other tip I would say just real quickly is, you know, we see this too, you know, a lot of times your best intentions are you want to help out your cousin or your brother or sister or somebody like that, and you want to co-sign for a car or whatnot. If you just keep in mind, if you do something like that, if you co-sign for somebody's auto loan, that's going to show up on your credit report as you being, you know, a co-borrower, an authorized user. It's going to count as debt that we have to, you know, potentially include. And if they don't pay on time, it can also affect your credit. So that's one thing I'd really try and avoid. So.
Oh, that's a really important point, Mark. You know, I hear so often people saying, oh, I want to get my credit in shape before I go see a lender, and I'm trying to do these things. And my take is always, oh no, let's go see a lender and have them tell you what to do. Is that indeed the right advice?
I think it is. And one of the reasons why is because once we do get a pre-approval and we've pulled your credit and we can take a look at what you've done, you know, you can ask your lender if they can possibly even do kind of what's called a rapid rescore, or it's almost like it's a what if scenario, like what if you pay off these credit cards, how can we boost your score? And again, the reason why we're trying to get that high score is because that's going to open up the door for better interest rates and potentially better loan programs and loan options.
Great. Sounds like credit score is just vital and something that really needs to, potential home buyers really need to be alert to. So thanks for sharing that with us. Veronica, let's go back to you. Curious about first-time home buyers. Who's considered a first-time home buyer? Are there first-time home buyer programs? We're always asked that. How do I get a first-time home buyer program? And am I a first-time home buyer? So can you share a little bit with us about that?
Sure. So the general rule of thumb for a first-time home buyer is anyone that has not owned a property in the past 3 years. A lot of people were affected with the downfall in 2008, and they were homeowners and they lost their properties. If they have not owned a property since then, they would be considered a first-time home buyer. Of course, if you've never owned a home, you are also considered a first-time home buyer. Regarding your question, Corby, as to first-time homebuyer programs, there are a multitude of first-time homebuyer programs out there in reference to maybe affordable housing, down payment assistance, lower down payment. I cannot go through all of those because Union Bank doesn't offer all of those. But again, my advice would be to speak with your local lender because they would be able to advise you as to what exactly is out there. The state of California offers first-time homebuyer programs. The city of Santa Barbara, I think, Mark, what we were talking about yesterday, offers first-time homebuyer programs. City of Oxnard offers first-time homebuyer programs. Union Bank offers first-time homebuyer programs. And again, these come in the form of grants. They come in the form of loans. They come in the form of what are called silent seconds, which are also loans. So there is a buffet of options for any people that are out there who are interested in, trying to take advantage. And I say that not in a bad way, not take advantage in a negative way at all. But if there's money out there and you're able to qualify for that, I absolutely suggest that you do that, or even do a simple thing as a Google search. And once you do that Google search, if you're kind of, leery or a little bit afraid to talk face to face with your loan officer, do that first so that you have a little bit of, knowledge in your back pocket, and then they will be able to answer any other questions that you may have.
Right. Well, it sounds like that's another great reason to get with a loan officer sooner rather than later. If there is a first-time homebuyer program out there that you're eligible for, they're going to tell you about that. You can work that into your game plan and your strategy. Sounds like that's just a really important step to take. Okay. Thanks, Veronica. Mark, let's go back to you. Down payment. That's always the big question. Do you need a 20% down payment? How long do you need to wait to save? And what's going to be important in this market in terms of down payment options?
Sure. Okay. Well, first of all, just kind of appreciate what Veronica had to say, because there are so many different kinds of programs. So meeting with a lender to kind of see what down payment options you have is going to be important. But to start off with, you know what, you can remove this from your worry list. You don't have to have 20% down. So that's the good news. You know, in Ventura and Santa Barbara County, you know, we're really fortunate to be able to have loan programs that allow us to put as little as 3% and 5% down for really great mortgage programs that are going to give you some of the best rates. And even for first-time home buyer options, even if you've got a little bit of credit issues, you're going to still be able to qualify for really good rates at 3 and 5% down. If you've worked in the military, there's a program for through VA that actually it's 100% financing up to a certain loan limit, and then a little bit more as you get up into higher loan amounts, depending on the area that you're buying in. And it's a little tiny window here in Santa Barbara and Ventura County, but there's USDA home loan options that are available. That's a little bit tougher window to fit into, but that's also 0% financing. And then FHA loans, if you know that you're sitting here thinking, shoot, I wish my credit was perfect, but it's not quite perfect. FHA offers great loan options at as little as 3.5% down. So those are some of the things that are available. Also, just kind of sources of funds for the down payment. So what can you use? So obviously, you know, savings that you have, gift funds from family members are acceptable sources of funds for the down payment. So if, you know, grandma and grandpa want to give you an extra 200,000, we'd all love that. You can get, you know, you can get gift funds from family members. Just let your loan officer know that you've got that available. Also, for a lot of people here, you're working for companies that have might be contributing to a 401k, and those plans allow you to borrow up to 50% of your balance, or up to $50,000. And you can literally go to the plan website and go in and look up loans, and then be sure and select for a home. And then you can see how those loans are, they're a loan, so it's not taxable. And it's a really great way to be able to put more money down. We see that really almost all the time. The last one I'd say is, you know, if you've got an IRA, you're able to pull up as a first-time home buyer $10,000 out towards a down payment without a penalty, but it would count towards income. I think those are kind of the main things I wanted to highlight. If you guys can think of anything else that I might have missed.
Well, those are some great options, and good to know. A lot of people might be closer to having a down payment than they think when you think about, you know, some retirement options or an IRA. I'm glad you mentioned that. So, and of course, these are things to talk to your loan officer about. And
Yep.
Again, get with the loan officer sooner rather than later. So you don't say, oh, I don't think I'm ready. And then you don't meet with them for a year and you find out, oh, I was ready, you know, 8 months ago, I could have gone in. So the sooner you meet with them, the better. A good loan officer does not care that you're not ready to buy right away. If they want to work with you, they want to be your partner and support you. You know, they're not making any money at that point. They don't actually make money until they make you a loan. So they have a lot of incentive to, you know, figure out how to get a loan to you. But it's, you know, they like working with you and trying to get you a game plan and get you in that readiness position. Sandra, so, okay, so I've said go meet with a loan officer. How do you select a lender? You know, what should you look for in a lender? Are there questions to ask? And how do you choose who to work with?
Well, I think it's important to shop around for a lender just to determine who can give you the most knowledge and information, rather than going with certain companies that have exclusive interest rates at super low rates. You oftentimes rates change, and as they change, some particular lenders, of course, rates change, and they might not have the best rate, but you have a really good relationship with your loan officer because they gave you so much knowledge and information regarding those certain programs. You just want to make sure you find someone that you can connect with, and that's going to give you basically the most information and knowledge.
That's great. So if you're just shopping strictly by rate and you go pick the lender who's got the best rate, but you don't ready to buy for 6 months, are you saying that in 6 months, that lender that you chose may not have the best interest rates? So,
Exactly, just because rates change, 2 to 3 times a day, you just don't know what's gonna happen in 6 months. And they might not have the best rate, and another company might have a good rate, but then you didn't build a relationship with that loan officer. So
Mhm.
you just wanna make sure what's the best available for you, as just like I said, building that relationship with your loan officer.
having that confidence and that in their integrity and their ability to get you a good product.
Exactly, because whenever you do choose a good loan officer, they're gonna get you that best, they're gonna try to get you that best rate available.
Because you have options, right? I mean, you don't just have one loan option. You have
Oh,
a number
there's
of
many
investors
different
that you
options
go
out
to.
there, correct.
Yeah. Okay. I think people don't necessarily understand that. They think, if you go to a lender, like here's their loan. They may not understand that you have investors that you can go to.
Exactly, and like I said, everybody has different interest rates, different programs, so you just want to be able to go with somebody that's going to give you the most information and that you build like rapport with.
Great. Thank you. So
Okay.
valuable. Um, So Veronica, we're going to ask this question of all of our panelists. There's obviously a lot of myths about the home loan process. And so we're going to debunk a couple of those today. So, what myth do you have that you think is you want to make sure that nobody still goes under that misconception and give us what the reality is?
There are so many myths out there. I can probably name 10 right off of the top of my head. I think one of the major myths that we didn't discuss is that a buyer is not required to pay a real estate agent. So when I first got in the business a million years ago, I actually thought that because I was extremely uneducated. When you speak with a realtor, you don't pay them. It's free 99. They make a commission and they make it differently. But again, when you are a buyer, you can get a consultation from me, from Sandra, from Mark, from anyone, and all of those things. Education is free, as it should be. So that I think is a huge misconception and a huge myth. I think another myth is that you are required. Credit is very, very good. Don't get me wrong. It will better your situation. But I think another myth is that you're required to have superior credit or excellent credit. Mark touched on the fact that FHA is for those people with the credit that is not so hot. So another myth is that you actually need, I don't know, I'll throw out a 700 score or a 720 score. That's very untrue. There are some lenders that will lend as low as a 580 score. Do you want to get into that, buyers that are on here? I don't think so. I think you need to meet with your local loan officer so that they can put you on the right path. But those are two significant myths that I think are very untrue. Again, you don't need money to talk to someone, and you don't need an excellent credit score to buy a home.
Great.
It's
Thanks,
better,
Veronica.
but you don't need it.
Good. It's good to know what the options are. Sandra, what myth would you like to debunk?
Oh, gosh. I was gonna kind of bring up what Mark was saying regarding the 20% down. I mean, I deal with clients all day long, and they all think that, oh, I have 20% down. I'm like, you could have bought a year ago. So like, I just want to kind of go back into that. You really don't need the 20% down. Even if you are a first-time home buyer, like we were all talking about, like FHA, the 3.5% down. I mean, that's kind of like where a bulk of my clients are right now, because they only have that 3.5% down. A lot of them have been getting gifts. Like, just gonna go back to what Mark was saying. Like, you can get a gift from a family member. We have a ton of clients that do that. And I would just say, when you go talk to your loan officer, let them know what your asset situation is. If you're going to need an assistance program, if you're not, or if you have a family member able to help you.
Great. So really don't need 20% down. You can have anywhere from 0 to 5 to 10% down. Get with a lender and find out what's available. Thank you. Mark, what about a myth that you want to give us the reality on?
I think you kind of a little bit about what we've all said. You don't have to be perfect, right? You don't have to have perfect credit. You don't have to have 20% down. I would say 70% of the time I spend is working with people, getting pre-approved, getting them set up to buy a home. So when you meet with a loan officer, you don't feel pressured to think that, okay, I'm ready to buy a house. I'm going to do this. We've saved up. We've spent the last 10 years of our lives getting perfect credit and 20% down. That's just not necessary. I mean, we're here to help people, bridge the gap from renting to owning. And it doesn't have to be perfect. I mean, we're in this to help you figure out how to get there. And probably the most rewarding experience I ever had was I worked with this family for literally 4 years as they prepped to buy a home. And the day they finally closed escrow on their house was like the best, probably one of the most fulfilling days of my career, because it was a little bit of work, but they were,
That feels so great.
and they were just, they were determined. There was a lot of factors involved, and we didn't talk a bit about self-employed versus employed, but there was some things happening there. But the point is that we're here to help you get to that next step, and it doesn't have to be perfect. We see all kinds of things. We can help with credit, helping you improve your credit, like I talked about before. We can look at loan options that are with less money down. So I think that's the biggest thing is you don't have to be perfect. And we've all been doing this for a long time, so we've seen a lot, right?
Right. Well, good point. I see all 3 loan officers nodding their head on that one. It sounds, and I've heard that too from loan officers. They'll say, my favorite deal was one that we worked for 3 years on. We worked on credit. We worked on saving down payment. We maybe changed markets so they could maybe get into something a little bit more affordable. Just whatever it was, it's like that's the most challenging and exciting and rewarding deals that so many loan officers have. So remember that when you're selecting a loan officer. If you get the vibe from someone that, oh gosh, I don't really want to work with you, you're not ready to buy right away, that's not probably your best loan officer. You're looking for someone who's in it for the long run, who's really wanting to help you where you are, meeting you where you are, and getting you to that readiness place where you're ready to make an offer. So that's a sign to me of a really good loan officer, someone who says, wow, that was my favorite deal. And like I said, I saw, Sandra and Veronica nodding as Mark was saying that. I feel like you guys have had those deals too. So good point. So this is time for your questions. If you have questions, please put them in the Q&A. I see a number of them in there. Kim, could you let us know what's the first question?
Yeah, we have some great questions. This has been such an informative panel. The first question here is there a cost to meet with a mortgage lender?
Is there a process?
A cost.
Oh, a cost to meet with the mortgage lender. Sandra, you kind of touched on that a little bit. Do you want to take that?
I did. So there is no cost to meet with the mortgage lender. It's free. We would just suggest for you guys to bring your income documentation, any asset documentation, so we can review it and see what you qualify for, as long as credit also. So there is no cost to meeting a mortgage lender.
So if they do need to have their credit run as part of the pre-approval, what would that cost if there was needed to be a charge for?
So I know a lot of different companies are out there that some of them don't charge any, some of them charge $30. So it could be anywhere from $0 to $30 for initial credit pull.
So it's a really small fee to really know what's on your credit.
But
Okay.
mostly there is no charge. I mean, you can wrap that into your loan, or you can waive the credit report fee.
Okay, great. Good.
And along those lines of the credit report, someone is asking if they provide you with a credit report instead of having that inquiry on their record, could they provide a credit report?
Could the,
You
are you
can-
saying could the buyer?
You
Could-
can, but I mean, I don't know how Mark and Veronica feel, but I always like to pull our own credit because you don't never know what comes up. I've had clients come in here with Credit Karma
Yeah.
reports, and it's only one bureau. So we do a hard pull, so it's all three bureaus. So it's very, very important to get your credit run with all three credit bureaus, so you know everything that's happening, because one credit bureau may not put a certain account in there or derogatory credit, but another credit bureau might. So you just want to make sure you don't miss anything.
Is there a difference between what I might get from a credit report company and what you as a mortgage lender are getting? Is there a difference between a mortgage loan credit score and a consumer credit score?
There is.
Okay,
So
so
the,
you're pulling the mortgage loan credit score.
Yes.
Okay, great,
I think
thank
that-
you.
I was gonna say, and I think we see that difference, when you're looking at like Credit Karma specifically is a good example, because you can see a variance of almost 100 points. And so, the other thing that I just wanted to add on pulling credit is that, when a lender is going to be looking at what you qualify for, when we pull credit, we're pulling in your payments as well. And so it's important for us as we calculate out, what you really are going to qualify for your total home price and loan. We really need to have that credit in there as well. And since this is going to be one of the biggest purchases of your entire lifetime, getting it right is really on us. And we want to make sure we have all the tools to do that. And pulling credit is really part of that. So it's a really something that I feel like for me, I really want to make sure we do that. I don't like to, I probably wouldn't, want to have someone hand me their credit report.
Okay, thanks, Mark. Veronica, do you have anything else to add on that?
Sure. So I think a lot of loan officers at the beginning, when you meet with them and they're giving you a consultation, they may do everything by hand prior to pulling your credit report. And that's fantastic because they'll give you a general idea of what you qualify for or what you don't qualify for. Just by
Veronica,
asking
you're cutting out a little bit.
general questions as
Veronica, you're cutting out a little bit. Can you maybe check your internet connection and we'll come back to you? In fact, I think you've frozen. Okay, Kim, is there another?
Yes,
question?
yes, there are two questions about 401k savings. So one is saying, can you use the 401k savings to help with down payment? And is that the same as an IRA?
Okay, Mark, you want to take that?
Sure. Yes, so they're different. So the 401k that you have, so if your 401k is with your current employer, then that's what I was talking about earlier, where you can go online and you can take a look at what you can borrow in terms of your 401k, taking a loan against it. And that's not a withdrawal as far as like, that doesn't create a taxable event. And hopefully that answers that question. If you've got retirement 401k from another company that you've got sitting around somewhere, that's a different story. So if you were to take money out of that, that's actually going to be more of a withdrawal. So, but specifically, if you're working for, a company that, let's say it's Deckers and you're in their 401k plan, that's a great example of where you can go online, you can pull up what you can qualify, what you can pull, you can pull up to 50% out or $50,000. And that's the example I was referring to earlier. Then the retirement, the IRAs, as first-time homebuyers, you can, like I said, borrow $10,000 without penalty. Anything else that you borrow above that is going to be taxed, and it would be a penalty towards the down payment. So, but that's great stuff. Those are great things to review with a loan officer, and bringing in all your assets is super important so that we can see the complete picture.
Great.
And then,
Thank you.
sorry, a follow-up question on that 401k account is that loan, do you pay yourself back with interest, or how does that work?
That's correct. So when you go and you look up your plan and what they, what the options are, you typically are paying yourself back interest. You're pulling that money out of the market, but you are paying yourself back interest, and it's comes out of your paycheck. Typically, each pay period, you'll have an amount that comes out. And if you, like I said, go in and request information about a loan, they'll typically be able to find out, what that repayment would be. And sometimes, it's up to a repayment up to about 15 years. So depending on the plan, they differ.
Okay.
Okay, great.
All right, Kim, next question.
So the next question is, this one's a little specific about buying abroad, purchasing something abroad. Do you need to contact lenders abroad?
Okay, I think that's probably, I don't know if either one of you want to take that, Mark or Sandra. That might be a little specific, and we'd be happy to reach out to this attendee after the webinar if you guys don't have a response to that.
We're not set up with domestic lenders. Like, we don't have anybody that we can send to abroad. So it's everything in the United States. So if they're looking to buy something out of the country, they would have to contact a lender out of the country in that country.
Okay.
And then this is another question about how you verify people's income. If someone as one of the couple has a social security number and the other has an ITIN number, how would that work in that income verification?
Sandra, can you take that?
Yes. So is that like a TIN number? Is that what it is? The ITN number?
Yes.
Yeah.
The ERC comes. Okay. So you basically, the way lenders, you look at it, it's basically a non-QM. A lot of those companies do TIN numbers where you can qualify them using their TIN number and the other person's social security number. They just have to provide all the correct documentation for immigration to prove that that is their TIN number. And they have to have like a social security TIN number attached to that.
Okay, great. Thank you. Kim, another question?
Yeah, another question is if someone is making car payments for a long time and they would like to get a home loan, will that negatively impact their credit score?
Mark, you want to take that?
I mean, if they've been making car payments for a long time on time, then it's probably going to positively impact their credit score. It's not a terrible thing to have debt. It really isn't. In fact, it's actually great to have a car loan that you're making payments on for a long time, because that's going to show longevity of credit history. And so that's actually a good thing.
Great. And then another question about 401k. What about using that when you're actually retired?
So I think the thing about a 401k when you're retired is then it falls into the category of assets that are retirement assets and retirement funds. The sort of, to be honest with you, the downside of that is that you're going to wind up paying it's going to be reported as income. So if you pull that 401k money out, it's going to show up as additional income. So you'll want to pull the taxes out of it. And then there's going to be a penalty on it. So that becomes a really expensive way to use money for a down payment. The better way is to sit down with your loan officer and determine maybe a bigger loan amount is going to be better and less money down. Because that can really, I don't know, maybe Sandra, I don't know if you have any other thoughts on that.
Yeah, so my thoughts is like regarding like debt to ratio income. So what they do is we talked about pre-approval earlier, you want to make sure even if you made these car payments, those car payments are going to be against your debt to ratio income in order to qualify. And that's how lenders qualify you.
And then that same person is asking, why is there a penalty for pulling 401k money out in retirement?
Oh, okay. So if you're not retired, there's a penalty. If you are retired, then they're probably, if you're able to pull money out based on your age, then that would be a different story. Then it would probably just count as income. And if that person has specific questions, maybe we can address those after the fact too, just to make sure I'm answering them correctly. I'd be happy to, do a follow-up on that.
It sounds like they're saying that they're at an age that they would not be paying the penalty, that they're eligible to take that out, but
Yep.
what's the impact of
Then,
that?
yeah, then I think it only shows up as income, and then you'd probably want to talk to your accountant for sure, just to make sure that what you were doing was not going to impact you tax-wise too much.
Yeah, a lot of these strategies too, you do want to check with your the person that does your taxes and see
Or
what's
your
gonna be
financial
the impact.
advisor, if you,
Mhm.
particularly if you're retired, I think. So,
Yeah, that's an important one. I mean, look at the loan officer and the tax accountant and your advisor, as a team to really figure out your best strategy.
Yeah, I was just thinking, I had someone who had pulled money out of a 401k, and it was a big chunk for a down payment. And then 6 or 7 months later called and said, hey, can I do a cash out refi? My taxes were more than I thought on that 401k withdrawal. So that's kind of why I mentioned that, but
Okay.
it was not a retirement age.
So very individual situations on this
Yep,
sometimes too.
very
So
much.
that's important to look at. Okay, Kim, other questions?
We've actually answered all the ones in the Q&A and the chat at this time,
Okay.
but
we're hoping to
please feel
get-
free to add any others.
Yeah,
that
we're
you
hoping to
have.
get Veronica back. She's lost her internet at the office, so she's apologizing for cutting out there, but we're hoping that she'll pop back in with us soon. Maybe
Oh,
that
I
is
think
her.
she's coming back. There
There
is.
she is. I was just saying that, Veronica, that you lost your connection and that we're hoping to get you back, and you are back. So
There is
great.
another question here. Any advice for buying out of state? A lot, this person's not able to afford to buy in California, and that would be meeting with someone in that state, I assume, but.
Well, not necessarily. Veronica, do you want to take that?
So first I want to address the not being able to afford to buy in California. A lot of people think that, and I was going to state earlier, that was one of the things I was going to say, that is a very big myth. So California is expensive, yes, but if you are making a rental payment right now, rent is outrageous. If you're able to sustain that type of rent payment, you would be able to sustain a mortgage payment. Believe it or not, a mortgage payment is not that far off as of what rent is right now. Regarding buying out of the area and out of state, everything works pretty much the same. If there are specific down payment assistance programs that you're asking about, that would be state specific, county specific, or so on and so forth. But again, speak with your lender. Some lenders lend out of state, other lenders do not. It's all dependent upon who you actually speak to. But in general, qualifying for a mortgage is going to be the same in California or in Utah or in Florida or in Texas or wherever it is. General rule is your income divided by your debt and whether or not you have good credit and how much money you have for a down payment.
Okay, and there's some lenders then that would loan in California as well as in other states.
There are some lenders that would lend in California and other states.
Yeah, lenders that currently lend in California, they might lend in
Yes.
other states as well.
Yes,
Okay,
yes,
you just need to check with them.
yeah,
Okay, great, thank you. I'm glad to have you back, Ron.
thanks.
Okay, Kim, anything else come in?
There was a follow-up question, and I'm not totally sure. It says, how high of a mortgage payment are you talking about? I'm not totally.
How high of a mortgage payment are you talking about? Maybe you could give us a little bit more on that. Happy to answer that. But not sure exactly where you want us to go.
Perhaps
here-
the question is in reference to rent versus mortgage. So let's say that you are paying $3,000 in rent right now. $3,000 off of the top of my head would probably buy you about $400,000 loan, which would buy you about a $600,000 home if you use down payment assistance program. So that if you're able to sustain that, you definitely would be able to sustain a mortgage payment. Definitely speak with a loan officer.
A
And
lot
there
of
is one
times
more.
people,
Oh, go
I'm
ahead.
just going to say that a lot of times we see people self-eliminate because they think, oh, it's so expensive here. Can't buy, I'll never be able to afford it. And really, that's the value of talking with the loan officer. Maybe you can't buy, but at the price that you want to buy. But let's find out instead of just guessing or making an assumption or hearing from a neighbor what they said. Find out from the loan officer, get that information from the lender. Here's what you can qualify for. Here's what your payments would be. Here's the options. Let's make this an informed decision rather than just making an assumption. Kim, other questions?
Yeah. Another question here. What are the fees buyers should be prepared for other than just the mortgage itself, like property taxes and inspection costs?
Sandra, do you want to take that?
Sure. So mostly all of all of everyone's loans, they do collect property taxes and insurance that are included in your mortgage payment. I know if you put more than 10%, you have an option not to include them, but mostly everybody does include your taxes and insurance. So when the loan officer gives you your mortgage payment, just make sure to ask them, does this include taxes and insurance, which it probably will, or even mortgage insurance if they're putting less than 20% down. Inspection cost. So inspection cost would be the appraisal. The appraisal is part of your closing cost. So that would be wrapped up into that. But there is other inspections that buyers do have to pay for, which would be their home inspection. So that is a cost that's outside that they have to pay a home inspector to inspect the property to make sure that, there's nothing wrong with the house, things like that.
And then what other fees do you have as a lender? Appraisal fee, underwriting, various fees like that. What would your closing costs be?
There's escrow fees that are part of closing cost, which would include title and escrow fee. There's transfer tax, impounds is a huge deal right now, especially with property taxes and insurance. I know a lot of the lenders are collecting the first half right now, which was, I think it was just paid on the 10th. So they're collecting the first half plus additional second half. So property taxes on your closing costs could be significantly high. It just depends. So those are part of the closing costs. Also, if you are getting offered a rate and you want to get a lower rate, you might want to pay discount points. So that's another cost right there. So just negotiate with your loan officer and see what options are out there for you regarding interest rate. You might want to be, 1% lower or 0.5% lower to bring your payment down. So there might be costs with that also.
And will a lender identify those fees when you're meeting with them? Will they let you know what all those fees would be?
Yeah, so the loan officer would be able to go over it with a loan estimate, and it would be all broken down. And you guys can go over all the fees and just break them all down, as sometimes the seller even pays for some of those closing costs, or the lender can give you a credit for those closing costs. It just all depends on the situation.
Okay, thanks, Sandra.
And I want to just jump in there.
Yes, please do, Mark.
On the choosing of a lender, one of the things that I think probably all three of us have seen and is sometimes kind of, frustrating is that not all the time do you always get all the fees, like people don't always go through all the closing costs. And I think it's really important as you're, selecting a lender that you're going to work with to make sure that you really understand what your down payment amount is, what your interest rate is, whether or not you're actually paying a fee to get a lower rate. And then closing costs, oftentimes specifically for escrow, are a lot of the closing costs are going to be based on your purchase price and loan amount. And so be sure that your lender walks you through all of those so that you not only know what the total amount is, but also so that you understand what you're paying for. I think that's really important. And I know that we don't always see that sometimes with people. So I just want to bring that up.
Great, good, thanks, Mark. Kim, is anything
then
else come in?
We did have another question here about how do you find a good home inspector that they hear that some people just do like a minimal inspection.
I think that comes from the realtor. I was going to jump in and I would say,
Yeah.
Corby, wouldn't you say that would be like ask your realtor?
In general, yes, I mean, that's who's working with the home inspectors most closely. So it's a good realtor question, as well as Coastal Housing Partnership works with a number of home inspectors that offer savings for employees of our member companies. So if you are using one of them, there's be a usually 10 to 15% savings there. So you might check that list that we'll actually send that out to you, the list of all of our network partners when we send you the recording. But it generally, your real estate agent's going to be the best resource to give you that info.
And then Veronica, someone was asking you to repeat those values you mentioned when you were talking about moving from rent to a mortgage.
The examples.
Yeah.
Sure. I think I used, if you're paying about $3,000 a month, that's probably going to get you about a $400,000 loan. And when I say that, I'll touch again on what Sandra was talking about. When you make a mortgage payment, your loan officer should, and obviously Sandra does that, and I'm sure Mark does that as well, should quote you your principal and interest payment, your tax payment, your insurance payment, and your mortgage insurance payment if you have mortgage insurance. So all of those things together for $3,000, basically, again, this is a very general number, about 400, even I would say maybe even to 450 would allow you to sustain that $3,000 mortgage payment. The purchase price on that is definitely up to you as to what you look for. But if you have a decent enough down payment, you could buy up to 600,000 or so on and so forth. I hope that info was helpful.
Great. Any last questions?
And the last question I see is, what's your advice of how to be more competitive when there are multiple offers on a home? And that might be real estate question, but.
That might be a real estate question, but let's run through each of you. I know we're kind of almost at our hour here, but each of you might have a perspective on that. So Sandra, what's your perspective on how to be more competitive?
What I would suggest is to work with your real estate agent to see if there's anything that you can do to be more competitive, like not ask for any closing cost or pay for certain fees on the seller side, or go up in sales price. So there's all these different ways that you can try to get your offer accepted. But I mean, I would just suggest that's more advice for the real estate agent, because we don't really get into all that. But my advice would try to do talk to your real estate agent to see what other things that could be more competitive. Like I said, offer higher amounts, come in with your own closing costs, don't ask for certain inspections, things like that.
Great, thanks. Mark, anything to add?
Yeah, I think number one is work with a local lender. I know for a fact that the listing agents really want to see that there's a local lender on the side of the buyer's side of the transaction, because they know us and they are confident that we can get the job done. So that's just, I think, just really a great way to make yourself more competitive. And then the other part is if your lender offers you a loan approval where they actually issue a loan commitment beyond just a pre-approval, where you go and you actually submit the loan to underwriting, you have a loan commitment, and then oftentimes you're then able to write an offer without a loan contingency, which is something that's we'd probably talk about, like later on with your lender, but that's a way to be more competitive.
Great, thanks, Mark. Veronica, anything to add to that?
Yeah, I think that there are actually 3 things that you can do to stand out and be the shining light when you're putting an offer. Number 1 would be to ensure that your realtor has verification that you are qualified and possibly verification of your assets. Number 2, if your mortgage consultant or your loan officer can offer a very fast close and you let your real estate agent know that on your behalf, that you will be able to close escrow very quickly. With that, in turn, a suggestion as to what Mark said, make sure that you're already approved. And number 3, which I think is very important, I've heard from a lot of my realtor partners, maybe write a letter and tell a story either about yourself or why you actually want to purchase that property, that's going to be your forever home. That makes a very, very big difference when you're actually putting in an offer and you have all those 3 bullet points there and available.
Okay, great. Thank you. And great tips. And again, your real estate agent can really support you with that as well. We are just past the hour, so I think we'll close there. As you can see all the contact information for each of our panelists here, if you want to reach out to them. And if you want to reach out to Kim or me, you can contact us, kim@coastalhousing.org, or me, Corby@coastalhousing.org. We will be sending you the recording of this. So grateful to our panelists today. Thank you so much for joining us and taking your time to share your knowledge. It's so valuable and really appreciate that. So thank you all and have a great afternoon.
Thank you.
Good luck, everybody.